Here's what everyone's getting wrong about Perth in 2025. While property commentators are debating whether Perth's boom is dead or alive, I've been running the actual numbers through my forecasting tool. And what I found will surprise you. Some suburbs in Perth are still posting 38% annual growth, with homes selling in 10 days. Others have hit a wall with zero quarterly growth and rising stock levels. So who's right? The bulls saying Perth's still got legs, or the bears calling it time on the cycle? I'm Gilbert Melgar. I'm a data analyst and a property investor, and I built SuburbsFinder specifically to be able to answer these kind of questions with data. Over the next few minutes, I'm going to show you exactly what the data is saying about Perth's growth potential right now. Over the past 5 years, Perth has seen exceptional growth across a range of suburbs. Some locations have doubled in value. When I pull up the latest numbers from June 2025 in SuburbsFinder, annual price growth across Perth is still sitting at 18%. But when I look at quarterly growth, it's more moderate. What this tells me is that we're not in a crash, but we're also not in the explosive growth phase we saw in 2021 and 2022. Instead, the market is entering a more selective phase. We're seeing different trends across suburbs based on supply, demand, and buyer activity. For example, suburbs like Madeley continue to show strong fundamentals. It recorded 38.79% annual growth recently. Properties are selling in around 10 days, and stock on market is just 0.2%. This kind of stock on market percentage is extremely low. This means very few properties are available relative to the total number of homes in the area. When this is combined with homes selling in under 10 days, this tells us demand is not only high, but buyers are acting quickly. And when that pressure exists, prices tend to rise sharply, which we see reflected in Madeley's near 39% growth. This is a characteristic of a suburb in the acceleration or momentum phase of the property cycle, when growth is still actively compounding due to strong competition and tight supply. Now let's compare that to a suburb like Mount Pleasant with a 1.75 million median, which has seen quarterly growth flatten along with rising stock. Properties are now taking around 18 days to sell. This tells us that Mount Pleasant is in its peak or plateau stage. Having a fragmented market like this is a sign that the market is shifting into a more mature phase, where growth is no longer general but increasingly concentrated in pockets with the right conditions like affordability, strong demand, and limited supply. Using SuburbsFinder, I can now find these concentrated pockets that have the right combinations of these factors. Like I did with the Madeley and Mount Pleasant examples, I'm going to track these 3 indicators to help me do that. First, stock on market percentage under 0.5%. This tells you how many properties are for sale relative to the total dwellings. A percentage of below 0.5 usually signals a supply constraint that can drive prices upwards. Second, days on market under 10 days. Fast sales reflect demand. Suburbs where properties are selling under 10 days indicate strong buyer urgency. And third, positive quarterly growth. This shows short-term price momentum combined with stock on market percentage and days on market. It can reveal early stage growth suburbs before the annual figures catch up. These indicators, when used together, provide a more complete picture than annual growth stats or median prices alone. And when I ran these filters, a few suburbs immediately stand out as having strong growth potential. Ridgewood shows up with close to 5.88% quarterly growth and 29.91 annual growth, a fast turnover at under 8 days, and stock on market at just 0.28%. Stratton appears with a 2.4 quarterly growth, 25.5% annual growth, 7-day selling time, and importantly, it's still affordable with the median price of $610K and offering 5.5 yield. Merriwa also meets our criteria. Strong quarterly growth of over 5%, strong annual growth of around 25%, very low stock levels, and homes moving under 7 days. Now let's look at a few suburbs where we're seeing signs of slowing due to affordability, with many of them now taking longer than 30 years to own a house. These are the ones I'd avoid buying into right now. I mentioned Mount Pleasant earlier, but there's also West Leaderville, which, after a strong run, has now become relatively unaffordable. So price momentum is starting to ease. It had a strong annual growth at 27.7%, but its quarterly growth has turned negative. There's also Cottesloe, which has a high price point, slow rising inventory, and stagnant short-term growth. These aren't bad suburbs. They're just not where the next phase of growth is likely to happen. In fact, some may still work well for long-term holds. But from a capital growth perspective, in the next 12 to 18 months, the opportunity is moving elsewhere. Now, if you already own property in Perth, this kind of market fragmentation tells you one thing. It's time to actively reassess your position. In a rising tide market, passive holding work fine. But when growth becomes selective, the performance of your suburb matters more than ever. Some areas are still compounding in value, while others may begin to stagnate for the next few years. If your suburb is showing signs of slowing, this might be the right time to consider unlocking equity. In a market like this, you don't necessarily need to exit Perth, but you need to be strategic. You might be able to reinvest in areas that are still under pressure with better indicators for growth. The same goes if you're sitting on significant gains from the last few years. Consider whether that equity could be rotated into suburbs like Ridgewood, Stratton, or Jundana, where the data shows ongoing momentum. This is less about trying to time the market and more about making sure your capital is working harder in the next stage of the cycle. So, is there still growth potential in Perth? Here's my verdict. Perth gets a 7.5 out of 10 for short-term growth potential in 2025. The opportunity is real, but it's no longer broad-based. Success now depends on suburb selection, not just market timing. If you're holding property in Perth, ask yourself 3 questions. Is my suburb still in demand? Has my property hit a growth ceiling? And am I using my equity strategically? If you're still looking to buy, focus on suburbs with tight stock, fast sales, and positive quarterly momentum. Now, everything I've shown you today came from SuburbsFinder, the same tool that I use to analyze over 15,200 plus suburbs across Australia. Instead of spending hours hunting through scattered data sources, SuburbsFinder gives you everything in one place. Days on market, yield calculations, growth forecasts, and the custom filters that help you spot opportunities before they become obvious. If you want to see how your suburb stacks up or find the next Stratton or Ridgewood before everyone else does, I put a link in the description where you can try SuburbsFinder for yourself for free. And if you found this analysis useful, next week I'm going to show you what the Melbourne market is doing. So hit that subscribe button and I'll see you in the next one.